Oops. I just was playing it, now it won't play. Hey, welcome everybody. Sorry, my video stopped playing for some reason. I don't know why my video stopped playing, but I'm trying to find another one, and I guess I'm just gonna have to go on somebody's YouTube. It's fine by me. Do what I gotta do.
Without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears unlikely to fully close anytime soon. Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall,
No, Tanya, it doesn't sound good so far. The expectation is for him to do a dovish style approach here, but we'll see if he goes more hawkish. And if he does, the market has not taken into account a hawkish Fed hike in December.
all participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19, or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic, when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally on demand. And without advocating any particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force and support overall economic growth. Such policies would take time to implement and have their effects. For the near term, a moderation of labor demand growth will be required to restore balance to the labor market.
Please, if you're watching, make sure to hit that like button so more and more people can see this on YouTube. It helped me go through the analytics, and I appreciate it.
Currently, the unemployment rate is at 3.7%, near 50-year lows, and job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month by many estimates. Job openings have now fallen by about 1.5 million this year, but remain higher than at any time before the pandemic. Wage growth, too, shows only tentative signs of returning to balance. Some measures of wage growth have ticked down recently, but the declines are very modest so far relative to earlier increases and still leave wage growth well above levels consistent with 2% inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close.
This sounds awfully hawkish, the direction he's starting to go. He's talking about not preemptively turning back down the inflation fight. So, I mean, let's see how he ends this.
By saying that we will stay the course until the job is done. Thank you.
He said we're going to stay the course. That means he's going to continue to be hawkish. That's not dovish. I would anticipate the market to have some kind of reaction here. That didn't sound very dovish to me. He said we're going to stay the course. He went against what they said.
Thank you very much, Chair Powell. I think you spared me the chore of asking you to pick between 50 and 75, so I won't have to ask you that. Thank you for your last paragraph. But I want to talk a little.
So, guys, what that means is we're doing 75. We're doing a 75 basis point rate hike, like I've said. He said we're staying the course, and the market's already factoring in a 50 basis point or less rate hike. So he said he's staying the course, which means should be very, very nervous if you're getting into positions at these higher levels right now, because he just said 75 basis points is basically going to happen. And this guy just reiterated it by saying, thank you, Jerome, or Chair Powell, for doing this. And so I don't have to ask you whether 50 or 75. So the breaking news here is Jerome Powell just said he's staying the course. And it should be 75 basis points in December. Let's continue listening.
Bit about wages and inflation. So, as you said, wages are rising faster than is consistent with a 2% inflation rate, assuming reasonable productivity. You said in November that wages are not the principal cause of prices going up. But for many workers, real wages have been falling lately. So I wonder, isn't there room for wages to rise a bit faster so workers can make up lost ground? And what level of wage increases do you think is consistent with the 2% inflation target?
Okay, so I guess I would start by saying that the inflation that we saw at the beginning of this episode back in March of 21 was not really related to wages at all. It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation has now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as it relates to that third category of core services ex housing. So we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage range that we look at, I would say that you're 1.5 or 2% above that with current wage increases. So particularly the employment compensation index and the average hourly earnings index, look at those two. It's about 1.5% higher than what would be consistent, making various adjustments, including for productivity, from nominal wages. So, and as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap is about 4 million, meaning if you look at all of the available jobs.
Okay. We heard what we needed. So for anybody who's here while I'm on here, if you want to discuss this, so Jerome Powell said he's going to stay the course. So I fear that a lot of people are thinking we're going to do 50 or 25 basis points still. But he's telling us he's staying the course, and I think that means we're doing 75. I think we're going to do 75 again, and he's warning us right now. So, and that comes in December. So if that's the case, this is all a facade like we've been thinking. This is going to lead a lot of people down the wrong path. Oh, right, Triple V. Now I know there's so many different people in here. I wasn't expecting to have all these people in here right now. If you're watching, make sure to hit that like button. It really does help. But as you can hear, I'm busy in the background. But I wanted to do this live so that everybody could see what was happening during the meeting. And Jerome Powell at the very end said, we're going to stay the course, and staying the course would indicate that he's going to continue to do a 75 basis point rate hike in December. And if that's the case, the market is not baked in a 75 basis point rate hike. They're baking in a 50 or less. And this is where we could get a little bit of a disruption in this pattern. So pay attention to this, and this is what we're looking at right now. If we're looking at the formation that's formed right here, we can have all these sidewinding little macro or micro views of the patterns. But when it all plays down to it, the macro view is what it matters. Right now, all these side patterns and all this shit that I always create for everybody so we can see it a little bit easier, it's essentially useless because this looks like a head and shoulders pattern. It looks like it's just bouncing out. There's no volume coming in to suggest we're going to move way out of this area. And an easier chart if you're new to my channel. Fed Reserve said in its minutes it's going to be a 50 basis point. I don't know, man. We'll see. But he said we're staying the course right at the very end. So to me, that leaves a little indecision. Like, okay, they want you to believe 50. But when it comes down to it, he's telling you to be prepared for 75. He said he's staying the course. If he goes 50, that he just lied to everybody. He's not staying the course. He's actually going backwards. 50 basis points. If he goes 50 or less, yeah, we'll get a market pump. But if we get a 50 or less, you know what's going to happen? We're going to go into hyperinflation. And if we go into hyperinflation, you're screwed. We're screwed. So we're screwed. I can just tell you right now, if you have not started packing your gold and silver, especially silver bags, and stacking it, you better start before it's too late. This is a complete disaster. And the fact the markets are pumping on this news, and the fact that XRP could even be going up today with Coinbase delisting them, not just from the UK, but off of their wallets in the US, not just XRP, but also XLM. Stellar Lumens was involved in this. So was Bitcoin Cash and Ethereum Classic. That's huge news that I've been warning about for 8 to 10 months now. CFX is in my audience as well, and he tried to warn about this, and everybody laughed at him about Coinbase. He said by around Halloween, this stuff would start coming to light. It's not that far past Halloween. What, a month off? That's why we don't make predictions. Tom, thank you so much for the $20. I did not come on here expecting somebody to send a donation, but I greatly appreciate it. Like, that's completely unexpected. But I really appreciate it. But that's what we have to look forward to. In the Fed minutes, it says, like XRP Perfection says, it says 50. I read the same thing, but what he said at the end gives me cause for concern that he's actually going to do 75. If he's staying the course, as he stated, that looks like that would lead XRP back down. I still think, though, that they can manipulate XRP back into this 433 range is why I won't shut up about it. Because until we break this bear flag confluently and end up to the bottom side of this 287 especially, I won't believe that we're ready to continue this full crash. I know we're coming sub 20 cents in my heart. But obviously there's manipulation at foot, and when it happens, nobody knows. But it's a tragedy, folks. It's a tragedy what's going on right now. And then it goes beyond that, though. If you look at how BlockFi, and you look how Indicus Capital went down just last week for bankruptcy, or this week, I should say. But we've also got Gemini that you really need to pay attention to. Pay attention to crypto.com.
I don't know. Jamie said it costs 146 when she gets
67. Or there's let's see. There's 47 likes and there's 62 viewers. Yeah, so there's a 15 like this, but most people wanted to see the video, and now that we got past, I mean, we can watch the very end of it, but we got what we needed to hear. And now if everybody's reading the minutes and didn't actually watch that speech, they're going to pump this market because everybody's going to think 50. But he said we're staying the course right at the very end. The very last sentence was, we're staying the course. And he slipped it in and then it ended. And then he went to talking one-on-one. So to me, that's not good. And what would it do for the DXY, the US dollar currency index? I mean, it's going to skyrocket it. I think it looks bullish in the US dollar. I know it had a retrace, but I think it looks more bullish for the US dollar than bearish. We eventually had to have a correction like this. We went parabolic for so long. Seems like to me we're starting a general retrace and we're bouncing off the 106.20, which is phenomenal news. And I think even if we do get rejected, we're going to have to come back up here to almost 110. Steve, welcome in. I would say if it does, if this pans out like this and the market gets a surprise because everybody's baking in a 50 now, let's say we get 75. I don't think the US dollar and the DXY is done because we have to overinflate our dollar to make it not look so bad in the US. But the rest of the world, it looks terrible, and that's why they're all trying to go back to their own gold standard. And that's not good. That means OPEC, and when we have the for gas and petroleum and all these or petro, they're not going to use the US dollar to pay for petro. They're starting to accept gold now and silver. There's 5 or 6 different countries already on board with this, and they're the big ones. So So if anybody has any questions while I'm on here, I'll take the questions. But I'm not gonna be able to stay on long. I mean, this is obviously the middle of the day. I just wanted to cover this for anybody who was interested. Yes, sir, Triple B, Nick. I appreciate that. We have 57 likes and there's 70 viewers, so it's not awful. It's not awful. Louisville, welcome in. Well, I can't even believe this. Vantage Escapes. Appreciate it. Oh, thanks, Steve. I appreciate that. Yeah, I was surprised how quickly we got to 15,000 subscribers. What are we at? Almost 15,200 now. I'm always going to do a live on these. Always. H2O. I use... Okay, so I bounce between 3, but as everybody knows, my liquid cash stays on Uphold, and they did their W9 update, so... Oh, for metals. I use, believe it or not, if I'm buying, like, B2 Gold or my commodities, I use Cash App. No joke. I use Cash App. Hey, Joe Ramrod, welcome to Tom's Army. I really appreciate it. You're 216. How awesome is that? Never expect to get a new member of Tom's Army here on the live. Guess you got to pick your spots, huh? Look at that, 61 likes now. Incredible. Thank you so much. So, I use Cash App to buy B2 Gold and all my other stuff, as far as like petroleum and that kind of stuff. But I also use my JP Morgan trading app as well. Tanya, have a good time at the gym. I did my 28th weight training exercises today, my 28th day. So I'm happy about that. So inspiration all around. Oh, now the comments don't want to show anymore. They were doing so well until just now. It's a YouTube bug, unfortunately. You got to think they did that for a reason. This was a bit of a sporadic announcement. Yes, sir, Nick. Yes, it was. Oh, JM Bullion. I use JM Bullion, H2O Alien. JM Bullion. I've been using them for, I think, 4 years. Hey, nice, Steve. 32 days at the gym. Let's go. Good things. Good stuff. I wouldn't touch Binance. I've been very transparent about that. I wouldn't touch Coinbase, Binance, or Crypto.com with a 10-foot pole. Nah, you couldn't pay me enough to have anything on those 3 exchanges. And I understand Binance and Crypto.com and Coinbase are the bigger ones in the USA. I don't give a damn. They stopped at one point letting you buy XRP. That's all I needed to know. That's why I had to go to Uphold. And if you're on Coinbase, do not sell anything until after December 5th. You will get yourself in a catch-22. If you sell anything between now and December 5th, it'll look like you're offloading it off of Coinbase to another wallet or exchange, but you immediately forfeit the right to your to any one of them that are ineligible now on Coinbase or deemed, not part of their system anymore. So I continue until Uphold tells me something different. That to me is your safest bet. Uphold went with the W9 compliance yesterday. They did an update overnight. And when you woke up, you had the W9 compliance. Of course, stock market's going up, Tom. 100%. He sounded hawkish. But all they see is that 50 basis point rate hike, like XRP Perfection mentioned in the Fed minutes, that came out before this. They did an optical illusion here. They're making it sound like 50 basis points, but he says he's staying the course. So this is going to have an immediate impact, and we could have a little pump here, but this is going to be one big trap as I've been speaking. There's only so much more room this has, and to me, the U.S. dollar looks bullish. What DEX do I recommend when all these exchanges don't allow you to... I mean... As much as a lot of people don't recognize, MEXC is a very underrated wallet. I mean, it's one you can use, but I have a problem with What the fuck is going on here? Get off my screen. But I have a problem when it comes to a lot of them, and I'm looking for the ones who are being compliant with the new regulations in the U.S. The fact that Uphold did the W-9 paperwork. So last year, you still had to give them your tax ID number, your tax identification. But you had to do it voluntarily. They weren't coming after you to send it in for your tax returns. I did it voluntarily. Sent it in. They sent me my tax form. I don't even remember if it was, I think it was a W-9 last year. And I did my taxes, and I had profits of over $12,000 on my $3,500 for XRP. I sold it out at over $15,000. So I had to pay taxes on over $12,000 of profits. And but now they made you, before December 9th, you have to sign this paperwork for the W-9. My information and Julie's was already on there for our stuff because we did it last year. But for anybody who didn't, you're going to have to do it again, and you're just going to have to verify it if you already did it. All I had to do was hit a check mark, and then it was already done because I had already done it. I've already filed taxes through Uphold for 2021. I'm not taking no easy route. If you're making money, you better pay the fucking government their money. Otherwise, they're coming after you, and that's why they did the W-9 not voluntarily anymore. And if you choose not to do it on Uphold, you have no access to your funds after December 9th, and that's on you. There's no way to get around it. So don't say I didn't warn you. And if you think that's a dick move by Uphold, I think you should think again, because now they're becoming transparent with the U.S. Regulatory and Securities and Exchange Commission for taxes. That's what you want. You want your crypto exchange to be transparent with the U.S. Regulatory Exchange, with the regulatory. That's what you want. So the fact Uphold did this when nobody else isn't, take them into serious consideration. That's why they're my number one and have been and always will be until they show me otherwise. They never once took XRP away from me. I've never once not been able to take money out, except when they were upgrading their Uphold card because there was something going on in another country, had no effect on where I was at or anywhere else. And for 4 or 5 days, I couldn't take money with my Uphold card, but I could still send it to my bank. And I did a large transaction of a couple thousand just to make sure, and then I sent it back. But I've been telling everybody from day one, Uphold's different. And yeah, when you buy from them, you have bigger fees. That's because they're trying to pay for their shit. It's just like when you buy silver and gold. They have your spot fee. It can be $5 an ounce over. With gold, it can be up to $75, $80 an ounce, depending on time, or more. That's how they pay for their exchange. So they don't have to give you cheap shit or rip you off on actual ounces. That's what they're doing on Uphold. They're charging you to buy the crypto so they can assure that they have the funds in hand. That's something that I've always said. So I'm willing to pay a little bit more if I have to. Fortunately for you and I've done my homework. And you don't have to. We can get spot free on BitGet if you're already on there. Now in the USA, they're not allowing new users. But now I've also got my other alternative that I still use just as much, MEXC. They're both equal to me. But I send my USDT or USDC off of Uphold, and then I send it over to MEXC or BitGet. No spot fees on XRP. And then I send it back to Uphold or to my wallet. Mimi, we'll relax in a minute, okay?
Oh, okay.
You'll be here for a minute?
I'll stay. I was gonna leave, but I'll stay.
Oh, you're about to leave?
No, I was thinking about going home because I got a thing going on tonight.
Oh, you're allowed to go home.
Well, I don't want to go home yet if you want to relax.
No problem, Michael. That's what I do. I try to make it easier for everybody, but I'm going to do an update talking about all of this. I appreciate everybody here, and we're going to be doing a lot more lives on YouTube after this. You can't take your money. You can't trade or do anything. You're going to become restricted. Your account will be restricted on Uphold after December 9th. If you don't want to do the taxes, you're not going to be trading the crypto, and you might as well just take all your money off Uphold now. I'm just telling everybody. If you don't want to comply with their tax orders, take all of your money off of Uphold before December 9th. Or do it transparently like I have been, so you don't have to worry about it next year and the year after. So I'm going to log off. I'm going to do an update after Julie's mom leaves. It's been a pleasure and an honor. I appreciate the $20 donation and the one person joining Tom's Army. I'm going to be doing a lot more lives from here on out on YouTube. I rather miss doing live YouTube updates. I do. So I appreciate each and every one of you and stay blessed. It's been a blessing. An absolute blessing, everyone. Have a good day, Darren, Mike, H2O, Tom, Michael, Tanya. I don't know. I can only see so many on here. Nick. Yep. Zoom wallet is good. They're doing their it's kind of like a it's a test right now on Zoom wallet. It's something to be watching though. I've been watching it myself, so I appreciate each and every one of you. I'll see you in the update shortly.